My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Summer on the Street edition of Mad Money from the heartbeat of the market, the New York Stock Exchange. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach, and coach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. All right, how the heck are we supposed to figure out what's going on when the president of the United States starts bad-mouthing China, right when his hand-picked team of negotiators is set to have a state dinner with their Chinese counterparts? I mean, these trade talks are so important. It's no wonder that the market's confused. Down hard on Trump's bellicose tweets, or rebounding on the hope that the Federal Reserve will bail us out with a rate cut tomorrow afternoon that we certainly need. And that's why the Dow closed down 23 points. S&P dipped 0.26%. NASDAQ lost 0.24%. Now, maybe the president... maybe he's got a brilliant plan here. I mean, I can see where he's coming from. But, man, it does not inspire confidence about these trade talks when you tweet stuff like, my team is negotiating with them now, but they always change the deal in the end to their benefit. They should probably wait out our election to see if we get one of the Democrats like Sleepy Joe. Then they can make a great deal, like in the past 30 years. End quote. I don't know. I didn't find that all that reassuring. China trying to wait Trump out is the nightmare scenario for the stock market. Trump advising them to do that is less than ideal. When he goes on to say, we have all the cards, I think he's telling us to get ready for another round of tariffs. This time on the last $320 billion worth of Chinese exports that he hasn't hit with yet. To me, this rhetoric makes no sense unless the president means to undermine his own Treasury Secretary, who's desperately trying to get China to buy something, anything, as some show of good faith. You know what? Forget that. Let's boil it down. Let me reframe this. I went to Philadelphia last week to address the Eagles at their summer training camp. They had some refs down there to explain the new rules to the players. I wish I could convene those zebra-striped refs now, because I think they'd throw a flag and nail the president for taunting, setting him back 15 yards. Unfortunately, there are no real referees when it comes to negotiations between the two most powerful countries on earth, though. Believe me, you watch, I am very sympathetic to the president's arguments on China. I'm in favor of him. He's not wrong. But just because something is true, that doesn't mean you should tweet it to the entire world. I found the timing terrible. More than that, Trump's making one major mistake. Not all of his potential Democratic opponents wants to go easy on China. Senator Elizabeth Warren is polling very strong. I think she's going to win Iowa, by the way. And if you look at her platform, she wants to be even tougher on the Chinese than Trump is, by far. Hey, that makes sense. Warren wants the Democrats to go back to being the party of organized labor. And free trade with China has devastated the labor movement. In fact, she doesn't just want to blast China for dumping their goods here. She also wants to blast them for dumping their pollution here. Hey, memo to President Xi. He may not be watching tonight, but if you're hoping to wait out the Trump administration, the current occupant of the White House is the devil you know. And it's never too late to make a deal with the devil, at least the one that does seem to be closing the door right now. So what happens if we get another round of tariffs? It's frankly harder to tell than you think. One thing's for certain, the incredibly strong quarter we got from Apple just tonight wouldn't have happened if this tariff tussle gets way out of control. I know there were some people who... critics who nitpicked about a service revenue slowdown, but I like what you saw if you backed out currency in a one-time gain from last year. Wearables and service revenues are now a huge business for Apple, bigger than a Fortune 50 company in less than the time that Tim Cook has been CEO. Who says the guy doesn't come up with anything? Do not dismiss these streams or the coming credit card stream. That will soon produce more revenues than anyone on Wall Street is expecting, including the Uber bulls. Will be able to have a long-term value of a subscriber to the iPhone when this is done. Own it, don't trade it. What else could be hurt? Let's see. Lately, we've had a slew of reports that show American companies are frantically cutting back their exposure to Chinese manufacturing. Now, in some cases, it's working. RH, Steel Restoration Hardware, it shifted its sourcing for the People's Republic and then blew away the numbers. It fallen nearly $8 today, thanks to the leadership of its redoubtable CEO, Gary Friedman. But then there's Cummins, the tremendous engine maker that we love from Columbus, Indiana. It reported a real bummer of a quarter, with international revenues down 15%. Why? They say it's, and I'm quoting from the report, primarily as a result of lower demand in the Chinese light-duty truck and construction markets, end quote. That stock closed down $8. That makes you want to flee from the industrials and hide in the domestic companies that benefit from lower interest rates, the ones like we're supposed to get tomorrow. Think housing plays like D.R. Horton, which is making a fortune building starter homes. Great quarter. Or Trex, we had them on recently, makes plastic decking that looks like real wood. I got it. You can't tell. Both stocks exploded hard. Trex was up 19% as it's adding capacity to meet rising demand. I love that. Think the companies that make building materials like Martin Marietta. It saw a surge in construction. No wonder the stock's up 10%. That's the kind of thing that might force the Fed chief Jay Powell tomorrow to reconsider his rate cut. But we've had we've had so many bad quarters from the industrials that I think it won't deter him. Should Powell be worried that he'll be being perceived as browbeaten by the president into cutting rates right when a bunch of economic indicators and reports from companies are doing well? Here's the thing. If I were Jay Powell, I'd be thinking, quote, you know what? If I don't cut, Trump will slap tariffs in the last $320 billion in goods from China, and he'll cause an instant recession. In fact, I can draft the perfect script for Powell right now. Here's what he should say. Now, I know he probably doesn't want to crib from me, but he's also a watcher. He's a close watcher. Here's what he should say. He should say, quote, we would like the economy to stay strong, but because of the possibility that we might experience a shock to the system from a new round of tariffs, we must cut interest rates by 1/4 of 1 point. And then he could add, get this, Jay, stay with me. Quote, our surveys indicate that the tariffs, while necessary in part to create a level playing field with the Chinese, are leading to a slowdown in some sectors of the economy, and it's important that the Fed stay vigilant in the face of any weakness. We will be dependent on data to see if we need to continue to reduce rates, including data that might be early sign of a faltering economy because of tariffs, which remain the sole precipitant to any industrial weakness and its carry-on effect to the consumer. End quote. Jay, your job is done. Just say that. Think of it as the perfect way for Powell to ease while still getting in some diplomatic jibes at the president without resorting to any Trump-style funny name calling that you or my mom wouldn't like. But make no mistake, if the trade war with China escalates again, we're going to need these rate cuts. Here's the bottom line. Taunting does not a trade policy make. But it sure does sound like we're about to get another round of tariffs. Thank heavens Jay Powell's got our back because the president's too busy stabbing his own Treasury Secretary in the back to accomplish anything positive. Yes.
Hi, Jim. I'm Rachel. I was wondering what you think about the Capital One data breach and how it's going to impact the stock and the future of other banks.
I'm sorry, the Capital
data breach. The Capital One
data breach. You know
what?
This is something I talked about with some very big credit card companies today. And this was the one that a lot of them felt was the data breach that we'll really focus on. They're wrong. We won't. And we won't tell you because we just had this Equifax settlement and nobody got hurt. As soon as someone has to get really hurt for this to occur, it's not going to matter. I'm not recommending Capital One, but I would buy other cards, including Apple, which is going to have the best card of all. But thank you so much for a very considered question. Yes.
Hi, Jim. I came all the way from Dallas, Texas.
Dallas, Texas. Well, what is the team? What's the team there? Was it? You have a football team. I remember.
Yes,
I had to
Dallas
see it.
Cowboys.
Yeah. All right, go ahead.
Okay, yes, you mentioned before that your daughter used Shopify as a platform for her business.
Shopify, absolutely.
Yes. Well, how far do you see Shopify going in the future?
Okay, I think Shopify, I'd say $36, $37 billion company, could be a $50 billion company. Frankly, I have to tell you something. It is shocking to me that Adobe or Salesforce hasn't bought it, but they don't want to sell. Shopify is the engine and empowerment of small and medium-sized businesses. I love them. Not a Cowboy fan. I'll never draft a Cowboy ever in fantasy, ever. But sometimes you have to get passionate. Yes, sir.
Hey, Jim, a big Boston, Belichick, Brady booyah to you from Massachusetts.
Why does everybody have to hurt me? Why do they have? Where are the Philadelphia? Regina Gilgan is my executive producer, and she has not picked a single Philadelphian for as long as I've done these outside shows, and it's wrong. How can I help?
I have a
Just do your assignment.
I have a fourth B for you. Considering the trade dispute, the potential listing on the Hong Kong Stock Exchange, and the future 8-for-1 split. What are your long and short-term views on Alibaba?
Alibaba, which, by the way, here's a little irony, everybody. Here's a great quiz. The largest company that trades on the New York Stock Exchange is a Chinese company, Alibaba, and it also happens to be the only Chinese company I'm recommending. Why? Because when you look at its financials, it looks like an American company. You seem like a smart fellow, Mike, even though you're the Belichick thing, which leaves me very cold. By the way, there was a Super Bowl 2 years ago. So my take is that you should buy Alibaba. All right, thank you. More
Jim.
questions. We have one more. Oh, this is it. Trump has mastered the art of taunting. 15 yards, which isn't much of an economic policy, but is really good in football. It does indicate more tariffs could be coming. Let's hope Chair Powell keeps us on the straight and narrow. Thank you, Jay. On Mad Money Tonight. It's Summer on the Street. I'm coming to you straight from the New York Stock Exchange with the CEO of Levi's to find out how the company's faring. And is Ethan Brown the Elon Musk of meat? Yes, the Elon Musk of meat. I'll tell you how the CEO of Beyond Meat is a visionary, despite today's drop. And I'm thanking NYSE President Stacey Cunningham for the hospitality and talking all about the latest market action just ahead. So stay with Cramer!
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.